CK Venkataraman, Managing Director of Titan, joins us now. Venkat, good morning. Thank you for joining us. We had a sense of a strong quarter because the forward-looking comments which you share ahead of numbers in terms of the jewelry sales, they are pretty much indicating that India is back, and consumer is here to stay.
Yeah, very much. And I think in segments like ours, which cater to consumers in the top of the income pyramid of the country, where the impact of inflation is less and where the intrinsic confidence, also because of their wealth situation and all that, would be better. I think the predictability is also much better for companies like us and for sectors like us. Yes.
So, going forward, given that the festival season has just about started, this year it is starting early because we are celebrating 75 years of independence. Then it's the Dashera, and then it is the Diwali sales. How do you expect this year will be different from last year?
Uh, we are equally confident about the rest of the year. In fact, the next few years going forward, because of some fundamental aspects of the Indian economy and the relentless surge that we're going to see towards becoming a more affluent nation. And we have other advantages in our company, like a very low market share in a largely unorganized industry, in fact, multiple industries. So, and of course, what you said about the puja season coming into Q2 this year, as opposed to being in October last year. So we expect the growth run of Q1 to continue.
Okay. While the jewelry business is doing exceedingly well, we've been asking you questions about what is happening to the non-jewelry business, whether it is the watch business or what essentially is happening to Fast Track.
Yeah, actually, the Titan brand has done exceedingly well in the last 2 years, particularly, and in a way continuing from what it was doing even earlier, which shows both the power of the brand and the intrinsic interest in the fashion analog watch as an accessory. And so the Titan brand has done very well. The Fast Track brand has struggled a bit in the last 2 to 3 years, but with a very, very big slew of launches in the smart wearable line over the last 6 months and going into H2 of CY22, as well as a lot of product introductions in the girls' lines already done in the analog side, and the guys' line coming in the next 6 months, and substantial marketing investments planned. I'm sure CY23 will see a big, big difference in the Fast Track brand as well.
Fast Track was also ace investor Rakesh Jhunjhunwala's question to you folks, of course, during that conference call. Something else that was discussed during the conference call was the propensity by the buyers to pay more, how the ticket size of the bills is going up. Can you talk a little bit more about that? Because it's also at a time when, there's inflation, there's pressure on the wallet, and we've been talking so much about demand.
Yeah, I was saying a little earlier that Titan company caters to customers who are sitting in the top of the income pyramid, and we're typically called the aspirers, the affluent, and the elite. And the role of inflation is substantially lower in the lives of these people as opposed to the middle class, the millions of middle class. And these are estimators, these three categories of consumers account for about a third of the total number of households in the country, about 100 million in around these days. And so these people, A, the role of inflation is low. B, in the last 2 years, they have additionally saved, it was estimated in some report that Indian households have additionally saved about 150 billion US dollars during 2020 and 21. And also between January of 20 and January of 22, the stock market value had gone up some 1.4 trillion, even though in the last 6 months it has fallen a little bit on that very high level. But both the wealth effect, the additional savings, and the low impact of inflation on their own lives keep these three segments going strong. And our business is virtually entirely dependent on these segments, and therefore, our ability to extract higher and higher prices through a much more exquisite necklace or a much more stunning watch or a much more stylish frame and much higher quality lens, that opportunity continues.
Now, your margins are also a function of making charges. Making charges are also a function of underlying commodity inflation. I'm just breaking this question for the benefit of our viewers, which is that making charges are always charged on the underlying product prices. And if gold prices, they have gone higher because of somebody's trying to reach you. You want to take the call?
No, it is just a calendar popping up. Carry on.
Okay. So my question is that making charges will automatically go higher because of increase in gold duty. Will that automatically indirectly aid your margins also?
See, what happens is that the commodity prices are passed through in the sense that the store of value keeps increasing also as the price of gold rises, the rate at which consumers can exchange their gold with the brands they buy from. So inflation is not really the same in gold as it is in every other category. So that's not an issue. But your point about making charges is, of course, valid, because when a customer exchanges a product, the making charges are lost. And therefore, and since they're typically designated in percentage terms, the making charges as they rise, it could be 1,000 rupees a gram going up to 1,100 a gram. So it does have some bearing on the psychology of the customers. But, because we have created a certain brand aura for ourselves in terms of the exquisiteness of the manner in which our products are designed, they're put together, they're crafted. Customers are willing to pay, more and more willing to pay the additional making charges without really questioning them.
Before we let you go, we also wanted to get a sense from you on how the digital business is doing. Digital as a percentage of total sales for you is what now?
For the whole company, it's in the ballpark of about 12%. For watch business, it's much higher. It's around 20 perhaps. And for jewelry, it's 6 or 7%. In terms of the actual omni-channel sale continues to rise, because the influence of digital is continuing to go up and up, because people during COVID got used to the idea of browsing the net, comparing products, on websites, deciding on one without having actually touching it or feeling it. To that extent, the habit is now, pretty deeply embedded. But because people can now actually go out, the joy of shopping is also back, particularly in high ticket categories like jewelry, in group purchases like weddings and all that. But the overall digital influence is here to stay and is continuing to rise. A lot of exploration, shortlisting, adding to cart kind of work is now happening digitally, even if the last mile purchase is made in person.
Okay, so that's as far as the digital percentage of revenues that you're getting in. I know Nick going to ask you the question about gold import duty, the impact it's going to have on margins. Just want to take that forward a little more. Where do you see your guidance? What is your guidance for the jewelry business? It was 12 to 13%. Will you increase that?
No, we are not increasing any guidance on our margin at the moment. We are focusing so much on our market share gain, just pushing hard on the sales growth, because the overall industry situation is in our favor, both from a supply side. The medium and the small jewelers are affected by both the supply side constraints, the hallmarking challenges as well as the banking, short constraints on the lending side. And the customers are looking more and more for brands of trust, more and more leaning towards Tata brand. Therefore, we want to push home that advantage and invest in stores, in inventory, in marketing, in price if necessary, and actually accelerate the market share gain and look at the margin gain expansions in the near term rather than in the immediate term.
That is coming in when it comes to the jewelry margin business as well. The earlier guidance has, of course, been of 12 to 13%. The stock trading in the green, higher by about 0.3%. Thank you so much for joining us live this morning.
Thank you very much. Bye-bye.